Gold monthly, the bull run is not over yet, ING, right? Gold has surged. Here's a quote. Gold has surged more than 15% so far this year and remains at historically high levels. We believe the record-breaking rally is likely to continue through the end of 24 with the current global geopolitical and macroeconomic landscape supporting the precious metal. Silver started out almost as weak as gold and then bounced, and silver is significantly stronger than gold today. So one way to explain that is quite simply the money coming into gold is stretching it more on the upside because it's more impulsive. It's very macro discretionary. And while there is buying in silver, less selling in silver. So what do I mean?
VinceLanci, managing partner at Echobay Partners LLC, is a seasoned expert in financial markets, focusing on commodities and macroeconomic trends. Based on his consideration, VinceLanci highlights that gold's bullish trend-based ING gold forecast, driven by geopolitical and macroeconomic factors, will continue through 2024. He expresses that central banks' increased gold accumulation signals a shift towards tangible assets. After testing resistance at $2,400 an ounce on Friday, the gold market has seen its bullish momentum wane. Official data from China's central bank shows its gold reserves holdings at 2,264 tons. Investors are taking this news in stride as gold continues to hold critical support above $2,350 an ounce. According to Vince, JP Morgan Chase's analysis predicts positive outcomes for precious metals due to potential rate cuts. Despite not announcing its own rate cuts, JP Morgan shared its expectations for gold and silver performance over the next year. The non-yielding yellow metal benefits from a low interest rate regime, and historically, gold has risen in periods of rate cuts. Over the last 2 decades, gold has consistently delivered positive returns during periods of interest rate cuts. JPM says its analysts remain bullish on gold prices into year-end, seeing prices rising towards $2,500 in fourth quarter of 2024, as the path towards a September rate cut by the Fed has grown wider, given the recent cooling in a very tight U.S. labor market. Furthermore, Vince mentions gold's resilience amid challenges like the Federal Reserve's interest rate stance and diverging U.S. Treasury yields, emphasizing its role as a hedge tied to global economic trends, including Chinese bond yields. Now, we present the clips of VinceLanci's insights from his recent video. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Silver upside and food downside. We talked about silver from Michael Oliver's point of view, as well as the fact that food prices coming in is not true. JPM looks at rate cut effects on gold and silver. We got that, put that out yesterday as well. They have, although they didn't announce their own rate cut following agenda following Citibank, they did announce what they think would happen given rate cuts over the next year. And we have the performance that they put out for every asset class, including gold, silver, and implicitly copper. China's Enbridge builds a new channel for cross-border settlement. That's a headline coming out of China. We're picking up some of their local media now. EF Bullion is a guy who's helping us out with that. And we're putting those up just to give you an idea of how informed they are. And in this story, you'll find, if you read this story, you'll find that they know less than you do, but more than the rest of the United States does. So that's the way things are these days. Okay, so let's moving on. Gold monthly, the bull run is not over yet, ING, right? Gold has surged. Here's a quote. Gold has surged more than 15% so far this year and remains at historically high levels. We believe the record-breaking rally is likely to continue through the end of 24 with the current global geopolitical and macroeconomic landscape supporting the precious metal. So in the report, they go through, they touch on all the main points and give some comments. Again, I like ING's regular reports. They're a good status update, as well as a good finger on the pulse of what banks are thinking. They don't have a lot of metals business, I think, yet, but I have a feeling that they're about to get into it. All right, so here's a little bit of an excerpt. Gold breaks records in the first half. Gold has surged more than 15% year to date, mostly on safe haven demand amid the conflicts in Ukraine and the Middle East, as well as buying by central banks. I would put this as first, and that is second. These are the events that got it going, and these are the events that keep it going. Or put it this way, these are the things that have been going on for 2 years, 3 years, 4 years, and these are the punctuation marks that make it rally even more. Gold traded above 2,300 for most of the second quarter and touched 2,400, I think at least 3 times, and recorded its third straight quarterly gain, marking its best run since the COVID pandemic. So in the United States, the only thing that performed better than gold this year is U.S. stocks, but they're leaving out silver. Hello, ING, silver outperformed U.S. stocks, according to that. Anyway, all kidding aside, this is a gold report, and banks don't talk about silver that much because it's too important. That's what I think. The precious metal set record after record in the first half of the year, despite the U.S. Federal Reserve keeping its rates high, strength in the U.S. dollar, and divergence in U.S. Treasury 10-year yields and ETF holdings and gold prices. Correct. If you want to understand why that is, it's because gold is still correlated to these things. The beta on the correlations has changed, number one. And number two, gold is following the Chinese 10-year bond yield because they're buying it to back their bonds. We believe gold is poised to keep its positive momentum going in the second half amid the current global geopolitical and macroeconomic landscape, while central bank demand is expected to grow. Let's go back. The report also includes some insights on U.S. rate cut hopes. They're boosting gold, which we saw on Friday. Central banks keep buying gold, and it goes through all the banks that are buying that. Gold ETFs turn positive in May. This is actually interesting. If you look at U.S. gold ETFs have been nothing but outflows for the past 2 years, and now you have those inflows coming in. So you might have a broadening of the gold buying cohorts. Net positions on COMEX hit 4-year high. Well, yeah, that's because macro discretionary funds are in. Safe haven demand will support gold. And that's what they think. And it's all continued in premium. We have the full PDF.
Regarding the market, VinceLanci mentions gold remains higher for the week, despite its rough day, while silver bounced back stronger. Moreover, Vince predicts China will buy silver and India will buy gold. He believes macro factors drive gold's impulsive buying, while silver faces less selling pressure. Gold prices are trading near steadily, and silver prices are higher in early U.S. trading on Tuesday, just ahead of highly anticipated comments from a major central bank official. Silver gains outpaced gold and almost all major financial markets in the second quarter. Concurrently, Vince emphasizes that gold's support level may only hold if current buying returns. He believes that if gold maintains its level for another day or two, it might be safe for speculative long positions, but advises caution with a stop below the 50-day moving average. Let's get back to the interview.
Quick comment about gold and silver yesterday. Gold's day was very bad. Okay, for the day, we're talking about the day's action, right? Gold's day was very bad, undoing everything that happened the day before, but still significantly higher on the week. It probably ran into some buying in this area because this is where the buying came in pre the number on Friday. So that buying is probably there, but it seems to be fading now. Now, moving to silver. Silver started out almost as weak as gold and then bounced, and silver is significantly stronger than gold today. So one way to explain that is quite simply the money coming into gold is stretching it more on the upside because it's more impulsive. It's very macro discretionary. And while there is buying in silver, there's less selling in silver. So what do I mean? When the buying runs out in gold, you'll see sellers come in, people taking profits. There are longs in gold. There are really no longs in silver on the macro discretionary side, small longs. And there's just not as much organic selling, meaning there's not as many people who want to make delivery right now. I suspect that China is on a buying spree for silver right now while India is buying gold. They seem to take turns. Anyway, that's the one-day comment. Everything, this trend line, I drew the trend line there just for effect. This is silver right now. It can go sideways for a week. You should be happy. You should be not unhappy. Gold, yeah, shitty day, right? But this 50-day moving average, to me, running parallel with an area that was sold last time is key. So if we get below the 50-day moving average and below this line, and the line turns down, then you'd be worried that we're going to go to this level here. Otherwise, nothing's changed here. I don't want to make everyone miserable here, but unless this buying comes back, then this will probably not hold. I think this buying This buying is macro discretionary buying that bought before the number, bought after the number, and didn't get filled, and now they're still buying. So they're buying the first pullback. They'll buy the second pullback. Will they buy the third pullback? I don't know. Give this a day. If the market holds here for another day or two, then it might be safe to be speculatively long. So this area here, remember, it was bought here, sold, right? And then when it broke it, it ended up being sold at the level it was bought. Kind of failed here, and now here we are up here, and it's being bought. So you can argue to be bullish right here with a stop out below, let's say, the 50-day moving average. I would just say be flat and buy if it's here another day from now.
According to the World Gold Council, central bank demand has become a key driver of gold in recent years. Dutch bank wane, in its updated gold forecast on June 13th, expected the gold price to steady at $2,300 in the second and third quarters before rising to $2,350 in the final quarter of 2024. Given the outlook for gold and silver prices amid global economic shifts, how do you perceive their role in diversified investment portfolios going forward? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.